Thanks for going through those. So let's move to Seritage. You mentioned that the company has recently changed strategy, and you went over that pretty quickly. Could you talk a bit more about that shift and whether or not that's changed your thesis on the company, or any plans that you have regarding the holdings?
Great question. So we follow Seritage quite so carefully that we saw this happening long before it was announced. So John Gabrielli is the new CFO. Amanda, the old CFO, is a very good accountant. She's a very good CFO, but she's not a deal maker. And the new CFO they brought in is a professional liquidator. So it sort of looked like there was something new happening when John showed up to replace Amanda. Because we knew the value of the properties, it was not a concern at all. It's strategically a great move. Basically, the company keeps making these announcements that the price is far below the NAV. Andrea Olshan's going on these programs and saying, we're all NAV all day. The price doesn't reflect the value of our properties. We're trying to make the price reflect the value of these properties. And ultimately, due to a number of factors, right? I mean, this has been a big, challenging project for them. And these are ex-Sears properties, et cetera. The fact that they're liquidating these means that we will get the true value. Now, they are really trying to maximize shareholder value. And they've determined with the help of Barclays that this is the best course of action. And we're for it. We voted for this plan. And Eddie Lampert's voted for the plan with his 25% position. So this will happen. This will move forward, and I'm very pleased about it. Actually, it caused a lot of confusion for a lot of folks. You probably, if you're watching closely, saw the shares moving all over the place in price. In fact, it was really remarkable as they were falling. We had contracts that we didn't expect to receive all of the shares, and contracts that didn't expire until even January of next year, people who had paid us money for that time. And they just put shares into our portfolio. So as the markets were volatile, we just watched the panic happen and shares just pour into our fund as they're announcing that they're going to pay $18 to $29 in cash for every share. So it was totally irrational. I'm very pleased with the opportunity. We'd be delighted if we could own this business, and they were doing this, continuing with their capital recycling program, and the shares could appreciate to 80, but they're not, and they're going to liquidate these, and over the next couple of years, we'll get 200% of the current stock price in cash. So it's a totally fine outcome, and a good reason that this permanent compounder will then be removed from our infinite compounder basket, and we'll continue searching the world we're always searching for new great opportunities.
Have you been tracking at all, as the properties have started to sell, whether or not those sales prices are matching your estimates of the property values?
We are tracking that very carefully, and we are being very conservative. We are being very conservative in all of our estimates. So they are selling for, we're very pleased. They're selling for 10, 15, 20% higher than what we've been calculating it internally. So I am quite confident. I'm going to mention this because it's very, for those who are sitting here listening, you can have this little secret, but we are seeing, because we're looking so closely at everything for so long, we're seeing things before other people, and it's all public information. But for whoever's asking the question, you might want to start watching the website, I hope they don't stop doing this because I've said it, but they have all of their properties listed online, and we have a spreadsheet that contains the links to all of those, it's actually a link to the development map that's behind that link on their property. And as these things get in contract for sale, those links break, and we don't have any public news yet, but we definitely know something is happening, and it usually results in a sale. So it's quite interesting to go there, and you'll notice that there's fewer than the 150 that I mentioned, and you can see which ones they are probably going to announce that are selling very soon. We're tracking all of this very, very closely. And by the way, if we start to notice the market declines, or that we were using the wrong cap rate, we will adjust our estimates on all of the properties. We'll look carefully and say, okay, we've been overestimating by 10%. We're very reluctant to bring our estimate values up, but we are happy to drop them and then redo the analysis, because we want reality and positive surprises. So we are very conservative, and we actually expect that the majority of the properties will sell for a premium of what we priced them for internally.